Hello and welcome to Deal Flow, the show that brings the latest news and analysis on mergers and acquisitions across Africa. I'm Erika van der Merwe. African investment management firm Convergence Partners launched one of the largest African-based infrastructure funds recently with a first close of $145 million. This is the only infrastructure fund that's dedicated purely to the information and communications technology sector in Africa. In this edition, we take a closer look at opportunities in the ICT sector in various African regions. Before that, let's talk deals of the week. Orange has agreed to sell its Dominican Republic business to Luxembourg-based cable and telecommunications company Altice for $1.4 billion. This comes as France's largest telecoms operator seeks to lower its debt. E-commerce and media firm Naspers says it has a $1.5 billion in offshore cash resources available for acquisitions. And Vodacom will pay $250 million in cash to acquire an additional 17% in its Tanzanian unit, increasing exposure to one of its few businesses outside of the South African market. According to research by advisory firm McKinsey, increased deployment of broadband in Africa could unleash tremendous growth opportunity. It estimates that improved internet access could boost gross domestic product across the continent by $300 billion a year by 2025. Hence the challenge to build internet services across various African regions. Now, Convergence Partners has taken up the challenge. Idan Segal is Chief Investment Officer and founding partner of Convergence Partners. Welcome, Idan. Really good to have you here, and congratulations on your first close. Now, there's lots of jargon in that, and we can talk about that. But first of all, just tell us about the ICT, so the information communications technology opportunity in Africa.
Thanks, Erika. So Africa, as you know, has about 1 billion people. At the moment, estimates range from about 800 to 850 million people being connected. And what does that actually mean? Those are typically voice subscribers, but not necessarily unique subscribers. Estimates for the number of unique subscribers probably closer to 500 or 600 million people. So there's been tremendous progress, but still a lot of work to be done. But on the broadband side, the picture is quite different. Estimates that have been recently released indicate only about 16% of Africans are online. And of that, probably less than 2/3 have true broadband as we know it. So the scale of the opportunity and the need for new investment in infrastructure is enormous.
So that potential, it's in line with the potential we see from building physical infrastructure, right? I'm thinking transport, energy and so on. So communications comes alongside that. We've had tremendous growth in various African regions. So one can only imagine how much more can be generated if one puts this technology into play. So if you were to look by region, so I know you're looking in particular at West Africa, East Africa and Southern Africa. What are the particular markets that you're looking at?
Those are the regions, so very much across sub-Saharan Africa. We focus on two different types of projects or companies. One that is regional, so multi-country, which the technology lends itself very well to, and secondly, more in-country investments. It is our strategy that no single country or region will dominate. Based on the needs, we think that the capital will be deployed quite widely.
What's been the appetite for your fund? So looking at your investors, these are all development finance institutions. So you've got the IFC in there, FMO, the Dutch Development Finance Institution, CDCs, the British one, the South African one, DBSA, as well as the European Investment Bank. So has it been an easy sell to these institutions who are seeking to encourage development in the continent?
It was a very compelling proposition, which is not to underestimate the challenge of fundraising, which is a long and arduous process.
How long did it take you to get here?
Since we formally launched, it's been around 3 years, so a very long process. But interestingly, the proposition was very compelling because we really aim to meet the same two objectives that these funders do, and that is commercial or financial returns as well as socio-economic impact. And our fund is strongly positioned to achieve both.
So you talk about commercial returns, but typically one would imagine that the DFIs can tolerate lower returns because of their dual objective. What sort of returns are you targeting in this fund?
So we are targeting upper quartile returns based on the nature of the opportunity and our track record and our style of investment. We're looking at north of 20% in dollars. So it is a very much commercially driven fund. We are speaking to a lot of non-DFI investors as well that we hope to get in subsequent closes. So our sector is one where we don't believe the development angle in any way detracts from the financial returns that can be obtained.
So you're likely to get commercial investors, so we're talking pension funds and...
Pension funds, fund of funds, family offices and possibly sovereign wealth funds.
So this was your first close. You're targeting a bigger number, $250 million US dollars. How much longer will it take you to get there?
We're aiming at probably the next 12 months. We've learned this process does take a long period of time, but hopefully by the end of 2014 we'll have reached our target.
But Idan, in the meantime, you need to get going, right? Because I understand that you have a 10-year commitment. Your investors give the money to you for 10 years. You have to find the investment, do the investment, and exit and realize and give them their money back in that period, right?
Correct. And the first 5 years will be dedicated to deploying the money. So we absolutely do have to get going, and that's why we chose to have a first closing. So it doesn't mean we've stopped the fundraising effort, but it does mean that we're open for business and starting to deploy this capital into investments as of today.
So you've explained broadly the kinds of assets you're looking at, and you also said not necessarily country specific, so it's cross-border, sort of bigger projects. But do you have a specific pipeline in mind? And in particular, are these assets that you will build from scratch or existing assets that you will tweak and provide capital to see growth?
So to answer the second question first, it's a blend. We're looking at roughly a third of the capital going to greenfields or new projects, probably a third towards more brownfields or growth investing, whereby we take assets and reposition them possibly from single owner assets to be used more efficiently by a broader group of users, as well as investing in mature companies along more classic private equity lines, but ones that do have a strong link to ICT infrastructure.
So Idan, are these all private assets that you're describing? It sounds that way. So you're not partnering with governments in building these assets?
We typically have invested in private assets only. There are projects that governments will look to the private sector to invest in, and we're very happy to participate in those.
Arguably, in the South African ICT environment, regulation has made it difficult for the private sector to invest, and I think it's hindered some confidence. What's your feeling, your impression of the regulatory environment in the rest of the African continent? Is this something that could be a hurdle?
It differs very much from country to country, so it's hard to give a sweeping statement. I think what is clear is the recognition that this sector is being given across the continent as a key sector to unlock growth across the economy. So the importance that we feel the sector deserves is being given. That doesn't necessarily translate into action. So for example, in terms of spectrum allocation, which is a key next wave, 4G or LTE, we've seen certain countries run ahead and give, but the vast majority are still mulling over which model they're going to use.
And pricing, do you have control over the pricing of the product that's ultimately delivered?
It'll be the fair market to determine the pricing, and of course, being such a critical sector, there is regulation, and that regulation should sit on top to make sure that pricing is efficient.
Idan, so that's on the regulatory side, doing business in general. So you have experience from your existing investments in the region. What are some of the challenges, and are they any different from doing business in South Africa?
The challenges are significant, and they do range from country to country. So as you mentioned, we do have a track record. We have been investing in this sector, in this geography for the past 7 years. So we feel we have a reasonably strong handle on how to do it, but not to underestimate the challenges there. And we're very much using this fund as a stepping stone to grow our team, grow our presence. We'll shortly be opening offices in both East and West Africa, and we feel that being increasingly local will help us overcome some of the challenges in creating successful investments.
Who are your competitors? With whom are you rubbing shoulders in bidding for some of these assets, and also on the other side in bidding for funds from the institutional investors?
So in relation to the assets, we haven't found a classic lookalike for Convergence Partners. There are obviously a lot of people that are interested in the same type of assets. So for example, generalist infrastructure funds would of course consider ICT as a potential sector where they would deploy their funds. Equally, classic private equity funds, depending on the nature of the company. We generally co-invest quite successfully with other parties, so it's not to date been an issue in terms of losing assets. Of course, the operators themselves, if they're still in the mindset of owning all of the infrastructure and using it for their sole use, in theory, I guess that is a competitor to the type of infrastructure we'd like to build for a broader base of users.
And what about South Africa? You spoke about Southern Africa would be one of the sort of three prongs, the three corners that you're looking at. Does that include South Africa, or does your mandate possibly exclude?
No, it does include South Africa. As I mentioned earlier, we don't want any one country to dominate, and that's not specifically about South Africa. It is an important region for us. In certain ways, it's more advanced than some of the other countries, so we're piloting different business models here that will hopefully be rolled out after South Africa into other markets.
So we're not saturated in South Africa on the ICT side then?
No, definitely not. For example, Convergence has recently announced that a project that it commenced many years ago called FiberCo, which is to create long-haul terrestrial fiber between the major cities and thereby increase access and bring down pricing, has just completed its first leg. And we see further investment in that type of asset, as well as wireless assets, satellite assets in South Africa and definitely in other countries.
So in conclusion, Idan, bringing it all together, it sounds as though your ambitions are to light up this continent in various metaphorical ways. Just your final sort of sentence on the ultimate ambitions for your fund.
That is very much the ambition, is to light up the continent. So we feel we play in a very important sector in a very interesting time for our continent, and we really hope to put our capital and skills to work to accelerate what is already an exciting decade ahead for the continent.
Idan, thank you. So thanks for coming in. Good talking to you. That's Idan Segal. He's Chief Investment Officer and founding partner of Convergence Partners. And that's it for Deal Flow this week. We'll see you same time next week. It's goodbye from me, Erika van der Merwe.